How's it going, John?
Hey, Demetrios. Hey, Matthew.
Good morning. Good morning.
This is session number 13, Wealth Wednesdays. I'm pretty happy we made it this far. I'm pretty happy we made it this far. We've been pretty consistent. I think looking back at some of the stuff we've talked about, it's been pretty foreshadowing. Some other stuff we've talked about, maybe not so much, but I think for the most part, it's been really good. So I'm happy that we're showing up and we're doing these.
Mm-hmm.
I'm going to share my screen. Let's get right into it. There's a lot that we talked about. Just get rid of everything. Here's organize this for you. Oh man. Let's just start right off with the bond market because we talked about bonds on a couple presentations ago. So yields actually just put in this week an all-time high since 2020, since 2019. Right? And I think that's a pretty big deal because if bond yields just hit all-time highs, that means US government bonds have hit all-time lows. Not all-time lows, but all-time low for that time period. Right? So I say that's pretty significant. And Matt, we were talking earlier, we have FOMC meeting today at 2 p.m. And these are the meetings that typically they'll either confirm like certain monetary policy. So they'll either confirm the continuation of a trend in assets, or these meetings can be determinant of the reversal of a trend in assets. So these meetings are a big deal, right? And you'll normally see big market movements around these meetings. So it's today at 2 p.m. It's not yet. It's 11 a.m. So we got about 3 hours. And we should see some market movement. Now we have yields making all-time highs before this meeting. Right? Do you guys see what I mean by you guys see that, right? They're making the all-time highs.
Yep.
Right? Here was our high. Here was our little correction down, which we spoke about. I did not think we were going to rip up and make a new high. I thought we would start some sort of correction lower in yields. Okay. So I was wrong there. But seeing this come up the way it has before the FOMC meeting is telling me, okay, this may be it here, right? Like this may be a top. We've been going up for how many weeks now? 1, 2, 3, 4, 5, 6, 7, 8 weeks. We've been heading higher. And for those 8 weeks, if I'm using the awesome oscillator, or RSI, which measures momentum, how fast price moves, then I would look at this and say that this last leg higher to make the higher high, put HH for higher high, and I'm going to put H or PH for previous high. Okay. If I look at the momentum between the previous high and the higher high, I can see that momentum is kind of slowing down, right? Like it made that higher high fine, but it didn't make it with as much ferocity as this peak here.
It's cooling off a little bit.
Right. Or this peak here. You can see the move up just had velocity here. Boom, boom. The pull back down, which we were looking at, didn't have as much velocity as the move up. Okay. We actually had I don't know if we'll get into it, but we had divergence on this move down. Call it div between these 2 points. And then after that divergence, we made the higher high, albeit with low momentum. So we got FOMC at 2 p.m. If they're going to talk about stuff that indicates, okay, like we're going to increase the interest rates, or the rate at which we increase interest rates, or the amount by which we increase interest rates to maybe 150 basis points, right? which right now they're doing like 75 basis points. So if they come out and say, oh, we're going to do 150 basis point hike, maybe something like that could come out and continue this trend of higher highs in yields. Okay. But if they do something like, 75 basis point hikes will continue until early next year, for example, well, that's kind of already expected by the market. So if they say something like that type of confirmation that nothing is getting more hawkish or more aggressive could be enough to take the yield lower. Okay. So that's my prediction. Yields lower after this FOMC meeting, maybe not right away, but certainly in the next few days or next few weeks after that meeting, we will see yields lower. And that should take things like Bitcoin higher. Okay. Or things like equity higher. Can Bitcoin come down bottom of this channel, get bought up and go up? Yes. Could this be the bottom? We could go up to maybe 25, 26, maybe 35. We hover around there and come back down. Yeah, probably too. I wouldn't be surprised by either one. But right now, it's so tough. I don't like these type of patterns after like moves down, right? Because I have a head and shoulders top, right? If we're talking technical patterns, I have like a head and shoulders top right there. If you call this the head, this is the shoulder, that's your right shoulder, right? You got a head and shoulders top in technically what is a downtrend, right? So, bet is that we could go lower to the bottom of that channel that I had drawn. Like that would be the ultimate play, but I wouldn't bet hard on that to happen. I would still be thinking like dollar cost averaging. I'm not quite sure, but I do think long-term wise, this is pretty decent value. And I would think just buying little bits, even as it came down to like 12, 13,000. And if it doesn't, if it bottoms here at 19,000, 20,000, 18,000, 17,000, then and it starts heading higher, well then, I don't know. I think most people should have been dollar cost averaging. When you're near the 200 weekly moving average, it's not the worst thing you could do, right? Doesn't mean that's the bottom. You can go into a bear trend and head higher. But if you look at just historically on this chart, anytime that we were close to the 200 period moving average, it was a good time to buy if you had waited, right?
Yeah.
But it's not a guarantee. Like this could easily become resistance, right? Like a 200 period moving average and a previous high coinciding could become resistance. And then you could start a bear market where this trend starts coming down, right? The black line. And then eventually price and the moving average intersect and price heads higher, right? So I think you gotta be prepared. And then let's just look at stocks real quick. That's what all our clients are invested in, that and bonds.
And I'll ask Serge, have you ever heard of Whale Alert on Twitter?
Yeah, I have.
Do you ever look at that?
I don't really pay attention to like which coins are moving to exchanges or off exchanges or anything like that. No.
Okay. Because I'm wondering how much of an effect it has, but you'll see like these huge transactions that they're watching for.
Yeah.
Okay. So what?
Yeah, like on-chain analysis, I think people do. Like I haven't gone deep into that. It's pretty much just seeing what's happening on chain, they say, right?
Yeah, they have an eye out and they'll let you know, hey, big money's moving.
That's right. But no, I don't pay too much attention. I pay more attention to the price movements of the actual asset. Okay, so here's the S&P. So, I think we said that we could probably get a bounce on stocks at some point, right? We were things were going down. We said we'd probably get a bounce. We got the bounce right into the 200 period moving average acting as resistance. And now I see like this, like five waves I can see to the downside back into this previous low here. Call it a pivot point. Okay. I'm going to break it down, go from the daily to the 4 hour. And you can see this, a 1, 2, a move back up for 2, a move down for 3, a move up for 4, a move down for 5. Okay. What I like about it is that the lows on 3 and 5 have some bullish divergence. See that? 5 is lower than 3, right? 5 is lower than 3. But the peaks on the awesome oscillator and the RSI, right? So the measurements is different. It's a lower low for wave 3 and it's a higher low for wave 5. Right? So that is called, we talked about it already, bullish divergence. Call it div. I'll put div for short. If I need to write it, bullish divergence. So we're getting a completion of like this 5-wave sequence. There's divergence between 3 and 5. 5 is right here at the previous pivot point, right? So support level. And again, in a few hours, we got FOMC meeting. And I think probabilities is that the FOMC meeting leads to a reversal of this trend for the reasons we discussed earlier. It's going to take more hawkish news to continue the trend lower, where status quo hawkish news, so hawkish news that's already expected, so 75 basis points, that potential outcome, or them turning dovish, so okay, we may have to lower interest rates, those two potential outcomes could drive this market higher. Okay. Now, if I go back to the daily, like I'm not sure. I'd bet that we're heading higher. Okay. But would I take a bet that we're going to head higher and break 430 or where we previously were? I'm not so sure about that. Right. I think we can get a sideways market. And that's pretty much it. So we got FOMC meeting. That's big for a few reasons. We got yields making all-time highs ahead of the FOMC. We're going to look at the US dollar real quick. The US dollar is making all-time highs ahead of the FOMC. And just for some context, the US dollar since August of 2021, so let's just call it a year, is up 24% against like a basket of currencies. Right? So in the currency world, that's pretty big. Right? It's a pretty big appreciation. Okay. Not as big as what happened here in the late 70s, but still.
So that lowest point, when was that? Because I can't see the numbers on the
2007, 2008.
Gotcha.
Yeah, so pretty much after 9/11, if you just bought the US dollar and nothing else, you'd have a pretty rock solid investment from now till.
You said 9/11. Where's 2001?
Sorry, not 9/11. The great. I always confuse that with the GFC. The GFC, man. All these things are fabricated anyways, man. I think just like GFC, 9/11. I think because it's all seems so like New Yorky. It's all like with New York, and it's all like primetime CNN. You know, I confused the two.
All right. All the big.
But the point is, the US dollar has gone straight up since that event. And what's happened since that event? The whole world has gotten much more indebted to the US dollar. So
that started the bailouts. Which we haven't talked about too much. That's something that will probably happen again in the future. There won't. I don't think there were as many.
Yeah, well, they've happened in Canada, right? Canada's notorious for some bailouts.
Yes, was it GM?
Chrysler, Bombardier, some
Yeah,
other aerospace companies. Yeah, yeah,
and then the US. I think there were some recently, last couple of years, but I don't think it was as much. There as much money as around 2008, where there was a lot of bailouts. Um, that's an interesting thing. That's an interesting concept that we can talk and argue about another day. But you're right. It looks like 2008 till now would have been just a big uptrend. And over the
big.
next, throughout the next, like this decade until like 2030, what do you think is going to happen to the US dollar compared to this basket of currencies?
Shit, that's a good question. Um, like, I think it gets stronger a little bit. Like, I would like to see. I wouldn't like to see it because I don't want the US dollar to get that much stronger, but
No? Come on, Serge.
from
USA.
like a technical
USA.
perspective,
Yep.
right? Like I wouldn't mind seeing like, because you see this here,
Hmm.
this is like a rectangle type. This is like a sideways pattern, right? And then the orange line is kind of like the trend, right? This is like orange lines denoting the trend. This red lines are like kind of showing you the sideways trend, right? I would kind of expect that this would at least go up from the breakout point, which is the top of the trend, the previous top here. I'd expect it to like at least go up by that much. So maybe 114, 115 on the DXY.
Okay. Okay.
And then I would expect like intervention to occur and like all the monetary policy would be to weaken the dollar and have this thing go back down. Because things are getting expensive as it is, dude. Like mortgages and stuff, all this stuff is getting super expensive just with yields and with where yields are now and where the US dollar is now. So I ask people, like, let's just go back to the 10-year yields, okay? So since 2020, and I know we're taking into our time into your time. I'll just go from here. September 2020. I'm not even gonna go from the wick, okay? Yields have gone up by 600%. Okay. So let's just assume that down here, cost of mortgage, let's just say $500,000 home, cost would be like, I don't know, $1,400 maybe. Let's just say, okay, I'm estimating. And then up here, the cost of that same mortgage would be maybe like $2,800. Okay. Just say,
Oh, are
okay.
you sure? You said you're estimating. I think we should get some
It's
actual numbers. That sounds.
not, you don't need to. It's pretty much what it is. Cause I know prices have like interest rates on mortgages have doubled while interest rates on the US yields have gone up 600%.
Sergio's not too far off.
Yeah, it's not.
Like for a $1,500, for $500,000, like it depends on the down payment, right? But on a minimal down payment on a $400,000 house, I'm paying roughly about $1,800 a month, right? So
Yeah.
he's not far off at all.
There you go. And me too, right? Me too. So what I'm saying is could yield handle another 600% increase? Or even 100 or even like 100% increase? Like I don't think so. Right? I think things would start breaking.
Yeah.
So what I would bet is, okay, we've had this move up so far so fast. I bet that yields are topping out soon. And that prices may actually come down and we'll start seeing alleviation in mortgage costs and rental costs. And oil may be the leading indicator here, like the price of gasoline. Okay. Like that may be the leading indicator as that neutralizes or stabilizes at like where we are now, $85 a barrel, $100 a barrel. and you see gas prices at like 150, 140, 135, like that's a good sign that inflation has started peaking. And we've seen it with the Canadian CPI, right?
Mhm.
So what I'm saying is like, if we're asking what's going to happen in the future, like that's how I'm thinking about it. I'm like, okay, does it make sense for the yields to continue to go up at this rate? And what would happen if they did? Chaos, right? People would default on homes, et cetera, et cetera. I don't think, as much as people say like, oh, the governments want people to do that, I don't think that's what they want, right? You know, what they don't want is like excess speculation and money laundering, whatever. Or maybe they do want that, who knows? But anyways, that's how I'm looking at it, right? So Matt, you're asking me, okay, what do you think the US dollar is going to do? I'm using yields, right? If yields go lower, the US dollar is going to go lower for the most part. That's how the trend, that's
Yeah.
how that correlation works.
That makes sense. And if the yields go up a little bit more,
Things will break,
gonna be
in my
tough.
opinion. Yes.
and the trend line, that moving average, has been coming down for so long. And it hasn't really changed course because we had this violent and quick spike down and then spike back up.
Correct.
But whenever
Exactly.
whenever things go down, people adapt. Housing prices go up because cost of borrowing is low, and then the interest rates come back up, and everyone feels that more than anything else.
That's right.
There's more talk, I think. There's more noticing the rates go up than with them going down. Because it looks like in
Yeah.
the same time period they went down by the same amount. Right?
Right.
Yeah.
Pretty much. You're
Mhm.
saying like, you're saying here?
Yeah, that time period of it going down, and then that it's gone up to about where it was before in the same amount of
Yeah.
time.
It was
But-
like here, people were getting mortgages for like
Yeah.
2.5, 3%, give or take.
And
2018, 2019. And then 2020, people were getting mortgages for like 1.4, 1.5, right?
Mhm.
Yeah, that's all.
Yeah. Something I realize is like people are so there's certain things that we all want, like a house. We
Mhm.
put so much of our income towards the house.
Yeah.
And instead of it being, this is the dollar amount of what the house is worth, we should think of it monthly. That house is worth this much monthly. So
Yeah.
whatever the rate is, that determines what the price of the house is.
Yeah. Yeah. I was on a chat with, yeah, exactly.
Yeah.
Like I was on a chat with this guy about Facebook and he's saying, price of homes going to keep coming down, blah, blah, blah. Right. And it's like, okay, like that's nice. But like what really matters is what you're saying, the monthly cost or the affordability on a monthly basis. Right? It's like your uncle may be like, oh, dude, back in my day, I paid 15% or 10% on my mortgage, right? You're complaining about 5%, 3.5%. It's like, okay, true. But you were paying 15% on like fuck all, right? You're paying 15% on like $100,000 mortgage, maybe, or 150, or maybe 200,000, maybe, right? Like, it's not the size of a lot of mortgages nowadays, right? Like people have 500, 400, $600,000 mortgages, right? It's like the average, right? So yeah, somebody pay attention, and that's why I don't think they can take the rates that much higher. That's pretty much what I'm saying.
It would be chaos. It blows my mind that there's like a group of people deciding what's going to happen to everybody's bills and cost of borrowing. And we're just like, well, let's wait till 2 p.m. We'll find out.
I have a
Yeah,
bold,
pretty much. 2 p. Yeah.
I have a bold prediction.
What is it,
Let's
Demetrius?
hear it.
I think quite the opposite can happen, where we can handle a higher yield. And here's now why. Unfortunately, it's going to displace a lot of people. No one's going to want to live in heavy populated areas because it's going to be way too expensive to live in those cities. So what's going to happen to people is there's going to be mass exoduses out of major cities because they're going to try to find housing where it's the cheapest. And that's like really way out there. But also shift politics to the political field, because less of a population in a
But
one.
that's already happening.
Oh yeah, but it's going to start happening like faster and in a bigger mass, right?
But even still, it's getting expensive, right? Like to buy a home in
Yeah.
even
People can
like
still
St.
do it, though.
Catharines, dude. Like,
But
yeah,
that's
they
not in the
can.
middle of nowhere. That's not a middle. I would argue I'm more in the middle of nowhere. Like, did you know
Yeah.
about Shelburne, Ontario before you met
Where
me?
are you? Sorry, where Demetrius? Where is it again?
Shelburne, Ontario.
Yeah, I heard like I had heard of it, but I didn't know
Yeah.
like where it was.
Yeah. Well, now you kind of know. It's about an hour north, right, of the city. So that's what people are going to have to start doing further out. Like even
Yeah, I'm
me,
like an hour and a half from Toronto.
Yeah, exactly. Well, even Niagara Falls, St. Catharines, it's pretty big cities, man. For
They are, but they're
Canadian
far from.
standard.
They're pretty far from Toronto.
Yeah, but they're pretty central. They don't need Toronto,
True.
right?
Yeah.
Even people will leave from there too.
Well, that's where people were moving to get away from like Toronto and the GTA before, right? Like there's people that live around me that have like nice homes and they bought those homes because it was much cheaper in Niagara Falls.
Yeah.
Right.
I
But
agree.
I don't think they feel like it's much cheaper anymore.
Yeah, so they might as well move further out and get a much bigger home for much less.
Right. Like we were looking at Fort Erie, which is even further, right?
Right. There you go.
And like a pretty big, like you could get a good chunk of house for $1 million.
Yeah, good chunk house.
$1
I've been
million
looking at
bucks.
houses in the middle of nowhere for like 600,000, 750,000, and you
Yeah.
can get a good house there too,
But dude, even 20% on $1 million house, you're looking at like at these interest rates right now. So let's say you have an $800,000 mortgage.
Yeah.
Here, let's just do it real quick.
Mm-hmm.
Just get Canada's one.
Sir, just want to let you know it's 11:30, so it leaves us 20 minutes for the
Do you think
for
we're
the
gonna
actual
be?
presentation.
Do you think we're gonna be okay?
Yeah, let's just dive into it and go through.
Do you think we'll have enough time, my left?
I think so.
Oh no, I don't want mortgage. Okay, give me 1 sec, dude. Here, you know what? I'm going to I'm gonna stop sharing. You share your screen. I'll pull up that number anyways, but let's get started. I'm actually curious to see what $800,000 mortgage would cost right now. I'll put the amortization to 30 years.
I would also wait a couple of years to make this purchase, and I'll tell you why. I think once you have locked in several Canadians buying housing at that rate, you can then lower it with the expectation that these people are locked in and that income will come in regardless of what.
Right.
So
Yeah. So if you did it now, that mortgage, $800,000 mortgage is going to cost you $4,457.
yeah,
That's a fixed rate mortgage, 5.39%.
yeah,
It's not too bad.
not bad at all.
Yeah, that's pretty doable.
All right, let's dive into the main presentation today. We'll be talking about globalization and trade. So the topic of the US dollar kind of plays a role here. We don't have it in here to talk about currencies. We could talk a little bit about that as well. So globalization, trade, what is this? How does it work? What are the impacts on us? What are some examples? Really, why should we care? What are we talking about here? Right, Serge?
Yeah, like I don't think we think about this stuff, right? So how it affects us.
Only
What
in
a privilege.
crisis we think
That's right.
about it. So once upon a time, people lived where they lived. We discovered new lands and kind of spread out. Pangea and all that. But whatever you grew to eat in your area was what you ate. It wasn't until Sergio, do you know why it's called an ice box? You ever hear your grandparents call the freezer an ice box?
Nah, my grandparents are Colombian.
Gotcha. Oh, I don't know if it
They're like
makes
farmer Colombians. They don't really.
gotcha,
That's probably
gotcha.
slang, right? Is that like some kind of like
In
English
Colombia, an
slang?
icebox probably means something entirely different.
I'm thinking icebox is slang, right? I don't think they don't know the slang.
It was called an ice box because before you had power to have an actual freezer, you just have a box with ice, and they'd actually farm ice from the Arctic or wherever there was ice because they couldn't make it, and they'd have to ship big blocks of ice. The bigger, the better, because it would last longer. And they'd put it on a boat. They'd have a boat with a big block of ice, ship it over, cut it up, and then you'd store your food in an ice box. Now we
That's
all have
cool. That's brilliant.
freezers and fridges, and yeah, that's how it was done. And now we can, eat foods that aren't even grown here. Dragon fruit, you get what's that? The Chinese stuff, the durian fruit, very expensive. They'll ship it over fresh on a plane and get it to you in a couple days. So the first ships came way before planes. This really allowed people to travel more and then transport physical goods. That's mostly what was available, physical goods, and then bringing immigrants over to do services and do work as well. So, help the labor market. Planes were created, cargo planes began delivering goods too. That kind of opened things up. Now with the internet, it's this easy open source way of delivering ideas, and time zones can be a bit of an issue, but I mean, if you're doing anything online, you're not limited to Canada. You can hire someone from another country to go ahead. Lead program. Al has callers in the States that dial out on numbers. There's just made more sense to have someone there. Same time zone, similar time zone, labor markets opened up. So with globalization, we're able to really open up a new market. You can sell and buy from different companies and people all across the world. So what does that really mean for us? And what is globalization if we haven't already answered? Globalization, as defined by Oxford Dictionary, is the process by which businesses or other organizations develop international influence or start operating on an international scale. Not to be mistaken, globalism, which is the government version of this, global government. This is the business world, and every country has their own rules. Maybe in the future there'll be rules for everyone on the globe, but right now it's sort of regional. And this just leads to more options, which leads to more competitions, makes a competitive market, should be, better for price as well. A dollar will go further with that many options. And cryptocurrency is something that really came about in a digital age. It's a borderless currency. It has to compete on the worldwide market. So included that as well. Anything else to be said about this before we go on to the next slide, Serge?
Well, I think, yeah, just when we talk about crypto, I guess money that could be transacted more like efficiently from to different jurisdictions. I guess that would be like an ultra form of globalization.
Yeah.
I think that's goes hand in hand. But I don't think it has to be that, but it could allow for more of that for sure.
Yeah, that is the way that everything's going. We're able to ship goods to other countries. Services that are online are also there. Labor market's kind of opening up. And here we will talk about cheaper labor, a big thing. A lot of stuff's made in China, things that are very labor intensive, don't require a lot of technology, things that maybe, like cars that would, cost a lot to transport and need big factories can be made here, or, there's partnerships with GM in Mexico. Things like textiles and clothing, a lot of times made overseas in China. And a big reason for that is minimum wage laws. Minimum wage laws here to lead to a higher standard of living, they would kind of push jobs overseas. And we know minimum wage here. I think every province is different. What is it in Ontario, Serge? I think it's around $15 now, right?
15.50.
15.50. So for comparison, we got different regions in China. Beijing, 25.3 yuan, which equates to 475 Canadian. So much, much less. And then that's the highest. They had a whole list here. We scroll down. There's another region here. It's at like 16 won. So $3, just over $3 Canadian as of right now. So the cost of shipping would not offset the difference between $15 and $3. So obviously a lot of jobs would go there. And that would also support their currency and their economy. So that was a big thing that started happening. There was a movement just over the last couple of years. This was kind of brought to awareness. Nike, we saw pictures of and videos of what the workplaces look like over there. A lot of people chose to stop buying things that were made in China and other countries. Certain companies started making things in America made, and making things in Canada. And the price really reflected that a lot of times. There was something to be done to bring the price down. They had to figure it out. It was kind of new. Wasn't really the easiest thing because it's something that we forgot that we haven't done in a while.
True. So true.
Yep. So why should you care? What are the impacts on you? Let's say it super bluntly. Globalization can make your life more expensive, or it could make it cheaper. It really depends. And I think we see this in the energy market. Canada's energy is pretty affordable. I think we're averaging 12 cents a kilowatt hour.
In Ontario?
In Ontario, I think Quebec's actually cheaper for that.
Yeah, they are. They are.
Yeah, we're about 12 cents per kilowatt hour. We're seeing a lot of areas in Europe are going up, and they're insane. Energy bills are doubling, right? But globalization can give you ideas of where economic growth could occur. If you're patriotic, you want everything made in your country, maybe not the best, but for consumers, it can be very, very good. And the competition does bring prices down as well. Can open investment doors that would otherwise be closed. It could increase the value of your stock portfolio, or it could decrease the value of your stock portfolio. You wrote that in, Serge. I can see how it can increase your stock portfolio. You can even have more customers. How can it decrease the value? What does that mean?
Well, I think if governments backpedal or backshift and go from a more globalistic policy to a more nationalistic one, and you're invested in a group of companies that benefits from that globalization, right? From that outsourcing, and all of a sudden you don't have that outsourcing, people are going to sell the stock.
Yeah, that's true. That makes a lot of sense.
Yeah.
That's right. All right, we got some news headlines here. Again, I think we said this like 3 times. Why should you care? How does it impact you?
This is like a part 2. Yeah, this is like
these are some examples.
Yeah, exactly. Just examples of stuff that's happening kind of right now.
That's right. So what happens when globalization stops or reverses its course? The opposite is called nationalism. Nationalization. We saw this in America for 4 years with Donald Trump saying, bring jobs back to America. We didn't get into the nitty gritty of that, but we saw a little bit of a movement. I think the needle was moved a little bit. And prices do go up. Countries need to readjust. That's huge. Factories that close down, reopening is not always easy. I think steel in Canada, we have quite a good abundance, and still vehicles are made with Mexican steel and steel from overseas. And then in the States, I don't think they have the same resources we do. They had closed down warehouses and then opened them again, giving people jobs. And there was a readjustment period where prices were high. I don't know. I'd have to check and see if that was totally, gone through, if the readjustment period was gone, or if it still was something that has to be chosen. If prices are higher and there's not value seen for that in that not a fair exchange, then the free market won't allow it to happen. It's not going to happen. And then, yeah, you have a couple news headlines here. I'm doing a lot of talking. I know I have news headlines on the next slide. You want to read these off, Serge, and just kind of give us some points on them?
Oh yeah, we got, so first one, fact sheet, President Biden signs executive order to implement Chips and Science Act 2022.
Mm-hmm.
So
I heard about this. What is this?
what is that? That's pretty much like the US saying, okay, maybe we should start making some of these things at home, essentially, right? Where they would rely on
microchips, right?
China or Taiwan or other actors to do that. So to invest home, that requires money, that requires spending. And if supply chains have been cut from other countries that they relied to get these quote unquote chips, that could increase prices at home for consumers and lower stock prices for the companies that make these things, right? So that's what's happening right now. Okay. Here's another headline. Russia considers nationalizing Western businesses that have closed over Ukraine invasion. Right. So what does that mean? It's like, okay, you guys don't want to be in our country, do business with us. McDonald's, we're going to create our own McDonald's. Thank you very much. Right. We'll nationalize this. Right. And
Okay.
you were talking about earlier energy prices in Europe, right? That's same thing, right? Russia is closing off. The UN is closing off, or not the UN, not the UN, the NATO's closing off. So again, less cooperation amongst countries, higher prices, and new deals being made, countries readjusting, companies readjusting. And then the last one, China's zero COVID policies are crippling its economic outlook. So China's been like closed down still, kind of, in many ways.
Mm-hmm.
Right? That impacts shipping costs, that impacts the things that the time it takes for us to get products, right? Tourism, a bunch of stuff, right? Like just a bunch of things. So, that's not good for anybody. And I think if we go to the next slide, we don't have to, but we all know that the stock market hasn't been. Oh, there you go. Yeah.
Yeah, we got some more here. You're talking about Russia closing off, and people are saying Germany will not survive winter without natural gas from Russia.
Right.
Germany was like very, very dependent on Russia for energy, oil, natural gas, even coal. I think they stopped with coal. I think they're still buying oil from them. Don't quote me on that, but they had some blackouts. And then California, which sometimes we think, okay, Europe, they're close to the countries like Russia, but then you hear California, their power grid. This is kind of ironic. They were encouraged through rebates and whatnot, government incentives to buy electric cars. And then people bought electric cars, started charging electric cars. They said, well, the power grid isn't strong enough or robust enough to charge all the electric cars. So don't charge your car. And people had their gas powered generators on to power their electric cars. And it's like, we talked about this in another presentation, the green presentation. This readjustment period of making this move, without the cars and the demand, the power grid is not going to be built out to stand it. But then without the power grid being built out to withstand it, why would people go buy electric cars? It doesn't really make any sense. And I think that's why we're not seeing the hydrogen cars anywhere but California. That's the only place with the stations.
Wait, for hydrogen cars?
Yeah, hydrogen cars. I think California is like the only place. Maybe there's some
Are those
scattered
common in
around.
California?
I wouldn't say common. There's probably double digits, but you know, that's
Right,
it.
right, right.
And
Okay.
you can probably drive around and own one. Toyota makes one there. But if you try to drive to another state, you're gonna be on the side of the road.
Yeah, how are you gonna
I don't
travel?
know. I don't know. You're
Okay,
gonna be
so it's
waiting
still
for
early.
hydrogen. It's
Where
still early. I don't know.
with a Tesla, you could drive around the United States and find chargers, and,
Yes, I believe so.
like plan a trip or whatever, right?
Yeah, you might be has to be a little careful, and but yeah, you'll make it through. Carry a generator in the trunk, you know?
Right, right.
Yeah.
Okay. Let's let's keep it
uh,
going. Let's keep it going.
and then Germany. So this there was two headlines I saw from a little while back. I'm a little shady on it. Germany had pulled out of the EU's agreement to ban fossil fuel cars by 2035. And then they made some changes and rejoined. I don't know what the changes are, but we're seeing this huge push to get rid of cars. And it's like, what's that going to look like? Are people really going to be okay with this? Like, is it one of those things, one of those climate change things where they say, yeah, we'll do it in 10 years. And then 5 years later, they say we need another 10 years. Or is it actually going to be pushed hard and fast in the next 10 or 15 years? So I don't know. Germany was in and out. Maybe they learned their lesson from all the blackouts being so dependent on Russia's oil. Who knows? That being said, if they are able to have proper energy sources and they no longer need oil, if they go maybe combination of hydroelectric, wind power, other things,
I
and
don't
they
see.
build out their grid, then maybe they'll be able to do something there. But
I don't
when
know.
it comes to the free market, what's cheap right now? It's oil and gas. So unless it's mandated by law, I don't think people are going to want to pay a lot more.
I don't think so either.
Yeah.
I don't think they can pull it off.
Oh,
Let's see.
and then stock market performance. I think you can speak to this better than me. I think this is your slide, Serge. I don't know what I'm
Yeah,
looking
this is
at
just
here.
showing
What is this?
stock market's been down 22.5%.
Hmm.
And that's been happening while we've seen increased signs of nationalization in many ways, right? And obviously along with interest rate hikes.
I'll play along with you here. So when you say stock market, what's this graph for? Is this S&P? Is this
This is
the
the
Dow?
S&P
What is this?
500.
S&P. You're saying there's more nationalization now?
Yeah, since like 2020. Yeah.
Why do you say that?
We just talked about all the different headlines, dude.
I don't know. Would you say, I know there's headlines, but would you say there's a more nationalization in the States now than there was before?
Before when?
Prior to 2020?
Maybe like more than there was in 2010, 2011, 2012. But I think less than there was in 2019 and 2020 and 2021.
That's interesting.
Dude, Russia just cut off their whole market from the European Union.
Yeah, we're looking
That's
at,
like that like they've done it before, but like they've been doing business for like 30 years at least or something like that.
but looking at US, like if you're just going to talk about oil, the US isn't even ramping up in their oil production. There's leases for drilling on public land that aren't being renewed. They're still buying from
But I don't think it's
overseas.
just oil. I don't think it's just like the impact on oil. It's
Okay.
like if a country's at war, right? And they start nationalize. Okay, let's not even look at Russia. Let's talk about China. If you have a country like China who's shutting down while the whole world's saying, no, we're open,
Hmm.
right?
They're like, no, we're doing this. Our people
Like
are gonna stay
that
home.
hasn't happened in a long time. Like China was pretty much open for business like for a long time.
Yeah.
At least since the early 90s and even before then, I'm pretty sure. Right? Like those are trends that are like have changed a little bit or have been disrupted, right? That like is a big thing that we haven't had in a long time.
Mhm.
right? Like the United States investing in their own production of microchips is a very big thing. Because what they're saying is, hey, Taiwan, we can't trust you to do this for us anymore.
Yeah, I think that's
And
very
and in
proactive. Well, it could
yes,
have been done years ago, but it's proactive now. It's better than
yeah,
not doing it, I think. And if they do it right, I don't know what they're doing, but I know that there's an effort made.
yes. So like, is that stuff bad for the stock market? Right now it is, yeah. It is because the market needs to adjust. It's a surprise, right? It's different.
What
But
per, what percentage? Like we're down 22.5% S&P 500.
yeah,
What percentage of that is the fault of nationalization?
probably like 30%, 25%,
Yeah, I
40%.
think the only reason that little bit of nationalization is happening is crisis. That's sort of the jump to solution. But I guess you're right. I'm trying to think. I don't know. I wouldn't imagine. The rhetoric isn't there. All I hear from rhetoric in the US right now is it's going global. Partnerships, UN, World Economic Forum. But I guess in reality, they're not really
It's
doing
more
that
like it's like what
everywhere, but the rhetoric is there. You know what I
yeah,
mean?
it's like okay, they're gonna say what they're gonna say. I just look at okay, what are they spending their money on and like what are
Mhm.
they going into debt for, right? Like what's actually happening? What are companies actually doing? Right? For sure there's tons of globalization, right? Like there's a lot more globalization in many different ways since the pandemic, right? But like in terms that like
Yeah.
really affect markets and like change things quite dramatically, like I think Russia, China, US, like those even those few headlines, right? Germany, like those are big things that the market needs to adjust to.
Mhm. Got it. Okay. Okay. Just wanted to talk to you about that for a minute. I don't know.
Yeah, yeah. The markets, stock markets don't like nationalization.
I think they don't like change and it is more
Yeah,
restrictive. But I think I got to look back at when there was a big shift to globalization and how the stock market reacted. I'd imagine it would
it was good. Like
increase
look at
when we
China,
had
you
those
would
periods.
yeah, like you got to look at China's stock market and the real estate market. Like it was crazy,
Yes.
crazy what happened.
Yes. China was, I think China's a big net exporter too. So they would benefit hugely. And then importing countries would, I think the consumers would benefit. I don't know what their stock market would look like from that if they're majority of the time the ones consuming.
Stock, well, in theory, it should do well, right? Because it's like, okay, these
Yeah.
companies are growing, right?
But it's not their companies.
These people are making more money. Yeah, but they're shareholders. These people are making more money at these companies. These companies have more like job orders, right? Like more, they're doing more business,
Uh-huh.
right? I think like it would do be good for the country, right? You start seeing like skyscrapers go up, which isn't necessarily a good thing, but it's perceived as a very good thing, right?
People
Um,
love skyscrapers. I think not as much now, but I think when the CN Tower was built, it was a big deal.
yeah.
Yeah. Yeah. All right. I think that's I'll have to come back to this topic. I think there's a lot there. Demetrios, maybe we'll ask you, what are some takeaways just from today's presentation?
I'd love to share some of my logins with you guys for some of the websites I use for documentaries on these up-to-date political and I guess event, like worldwide events stuff. Like for example, it's funny that we were touching on globalization and oil and whatnot. And before big oil was kind of established and the economy kind of went boom, um, there was nothing before. There was just electricity, right? Electric cars were kind of more in demand just because they were a lot easier to use.
Yeah,
Right.
electric cars came first. That's right.
Uh, and there was a big push to get oil cars out there. And what ended up happening is, companies were bought out eventually, just so that vehicles were prevented from being made anymore, right? And lawsuits back then were, kind of like not even a slap on the wrist. It was like, a few $100, and like a few $100 to a millionaire is like, change. Yeah, like you lose more money in the couch. So watching now big oil and this, I think there is a big hit when big oil is not being, I guess, used as it was intended and, designed to, like, built to be, the empire it was. Of course, the market's gonna shake when oil is not doing its greatest. And Matthew touched on something there where he said, America hasn't even started kind of producing their own energy there. Yeah, I don't think they will. I think there's a lot of politics in place that America, politicians of America, have a pay for play scheme where they make more money importing oil from certain nations. And Russia's kind of cut off to the scheme in Europe there, and they're kind of just toying with Europe. So I don't know. It's very, I would say, the most versatile the market's ever been. I think is right now. We see it on the market. It's very shaky.
That's interesting.
Yeah.
Yeah, if you look back in oil, I think it's the Rockefeller family, maybe another one. They had a huge stake in what the oil industry looked like in the U.S. And now, I don't know, ExxonMobil, there's a whole bunch of, I think it's more decentralized, which is probably for the best. I would like to watch those documentaries, so I think that would be really interesting.
Yeah, I'll forward you logins.
Cool. All right. Sounds good. All right, guys, it is 12 o'clock, my lads. I think we will cut it there. This was a good session. We'll meet up again in 2 weeks.
Sounds good, guys. Enjoy the rest of your
Awesome,
day.
Matt. Awesome, Demetrios.
I'm hopping off.
Okay, guys, have a good one, eh?
Sweet. All right. Take care.